All right. Hello and welcome to all our shareholders and viewers. In our webinar today, we'll be discussing Fobi's financial highlights. My name is Dev Seidel, and I will be the host of the webinar today. Along with me, I have Rob Anson, Fobi's CEO and President of the board, and Mark Lotz, Fobi's CFO. The agenda of the presentation will be as follows. Mark will start by going over the financial highlights. Next, Rob will provide more details and insights on how these financials relate to Fobi's business and talk about recent milestones the company has completed. We'll then finish with a Q&A section. If you have not previously submitted your questions by email, we'll also be taking questions from the Q&A feature on Zoom. So you're able to submit your questions there. The webinar will be recorded and posted on the website later, which you'll be able to share if you're not able to view it now, for people that weren't able to view it now. I'll start by handing it over to Mark.
Thank you. Good morning. Appreciate your attendance and interest in Fobi today. We're looking at selected highlights of the financial position of the company for its most recently completed quarter end, September 30th, 2021. The full financial statements are available on our website under the AGM section and on SEDAR. I'll start with cash. Cash continues to grow from year end of just 7.5 million to 8.27 for the quarter. The increase in cash was largely as the result of the exercise of 5,275,000 warrants exercised for 1.19 million. In addition, 2,228,000 stock options were exercised for proceeds of 975,000. This enabled the company to bring into treasury 2.17 million of cash without fees from our existing shareholder base. Additionally, 481,000 of loans made during the process of recent acquisitions were repaid to the company in the quarter. Next. Accounts receivable increased due to revenue from our partnerships and previous acquisitions. The overall balance remains high, however, as a result of amounts due from CRA. These amounts were pending a GST review, which was successfully completed, and we expect these funds to be repatriated to the company soon. Right. Moving to current assets. This represents the combination of an increase in cash and accounts receivable, sitting at 9.85 million. This puts the company in a strong position to execute the business model. Next, talking about current liabilities. The increase in the quarter of $280,000 was primarily caused by the timing of a $105,000 payroll remittance liability due to CRA as a result of stock option exercises in the quarter. The remaining increase was the result of general business activity increases and timing of payments. Working capital. Working capital of just under $9 million increased as a result of the strong improvement in cash and accounts receivable, our current assets, offset by the increase in liabilities. On a cash flow basis, the company's current monthly use of cash approximates $700,000. Today, we have 12 months of reserve without factoring in growth of revenue. The single largest item on the income statement in last quarter was stock-based compensation, a non-cash item. The prudent use of stock options at this stage of the company's growth has enabled us to attract leading talent in the space. Together, these factors put the company in a strong position during the next growth phase. Next slide. Revenue in the quarter is $580,000, increased substantially on a quarterly basis due to revenue recognition from partnerships and acquisitions combined to our existing streams. A strong trend in the company continues. Rob, with that, I'll pass it back to you.
Thank you, Mark. So I'll pass it off to Rob now. Rob will touch on a few key different pieces of the company so far relating to those highlights.
Hey, thank you everyone for joining us today. It was a very strong quarter for us from a growth perspective on all facets of the business and its operation. It's highlighted here, products and development of our engineering team's efforts, led by Tamer, of course, our CTO. Fobi 3.0 was a very critical one for us back last quarter when we looked at securing the much needed chips to implement and architect the design application of our new board. Current global shortages, of course, and supply chain has made everything extremely difficult. And that was a big, big moment for us, enabling to secure much needed inventories. Check vax. We've seen COVID, seems like 20 years now, but carried on for now the last 24 months, disrupting businesses and operations, our ability to provide interoperability, as we've seen in press releases with various operators in the US. COVID is unfortunately still an issue, will be an issue for coming years, and we continue to develop solutions to support local business operators stay open and in fact return people to work. Conference and venue management, as we've seen the changes now and restrictions for compliance, operational stress that's put on businesses when you're looking at large groups and arenas and venues and whatnot, where we've partaken with some of the largest casino groups and NCAA and many others from an operational perspective. Our products continue to be very relevant and leading edge. We have great agility with the horsepower in our team to deliver these relative products in a very, very timely fashion. One thing I think that sets us apart from the majority of the other companies is our speed and agility, of which we've architected our solutions and developed all of these project-based implementations in a very, very timely manner. Next slide. The quarter brought us further advancements in some key partnerships from us from a strategy perspective, as well as revenue monetization perspective. As everyone sees here, we have furthered our relationship with TELUS and our procurement deal. We advanced our existing contract with Vend. We brought on Lightspeed, Shopify, Amazon, and Hedera. When we looked at checkvax and verified credentials, utilization of the public node and blockchain is a very key component for us moving forward for 2022 and beyond around digital identity. The same premise goes for Wallet Pass, as we've seen continued progression in our products and services leveraging the Pass Creator Wallet Pass. We continue to blaze new trails and set new standards when it comes to those. Next slide. Some key contracts to highlight on once again, ITG, 8,000 independent convenience operators in the UK. This was the launch of the Fobi data exchange, ingesting all of the data, processing, normalizing, segmenting the data, and now monetizing the data to third-party brands. Very big component. It was a great addition to our existing pipeline, as we've seen continued activity this quarter and already in discussions for many opportunities in 2022. Shopify, of course, great value, interesting opportunity for us of bridging the online and offline world of data. Azincourt in the exploration of mining, Chiaro now entering into the cannabis space. One of our big events most recently just completed, Bahamar down in the Bahamas for the NCAA. We had Las Vegas for the Duke and Gonzaga Roman Empire game, T-Mobile Arena. And we had the big tournament for NCAA down in Florida once again for men's and women's regional playoff. Next slide. The quarter brought us the definitive agreement to Passcreator, which solidified our ability to maintain and drive ownership of not just the resource, but more importantly, our forward-looking development needs to support where we're headed. Key acquisition for us is we've built 4 different commercialized product offerings in a very short time to bolt on to the solution. There's no arguing the world is going digital. It is going mobile. The use of the digital wallet is going to become a daily occurrence and the norm for us. And we're extremely well positioned now with the acquisition of Passcreator. Quarter also saw the definitive agreement for Qples. Qples for us has been a very, very big surprise and a very early stage, I guess, growth trajectory. To see the value of what they have from the CPG retailers and the CPG brands, of course, extremely synergistic and plugs into our roadmap and vision of unifying not just the operation, but the shopper experience and creating the ability now to provide real-time measurement to the CPG manufacturers, as well as the personalized direct shopping experience across all channels of mobile, online, and in store. Next slide. Revenue. As we've now seen the realization of revenue the last 3 quarters, we've seen a nice bump this quarter of past. Company anticipates to see same continued multiples quarter over quarter for the remainder of 2022 and beyond. We're starting now to see the value of the integration between the platforms of Passcreator and Fobi and now Qples. For us, we're very, very bullish on 2022 and next quarter's numbers as a result of the increased traffic that we're seeing on all of our assets to date. Next slide. As I mentioned, we're anticipating our biggest year yet, of course, ahead of us. We've positioned everything extremely well from a product standpoint to meet the current needs of the market. We've seen that in today's press release and announcement, of course, with Amazon from a fulfillment perspective, and I've seen the questions on that, so we'll get to that in a moment. But it's also been a very strong quarter for us and strong year when it comes to partnerships. Third-party validation for a young company is absolutely critical and crucial to exponential growth. We're using the channel partnerships of which we've put in place with the Teluses and Amazons and Lightspeeds and Shopify and Vend and others has enabled us to capture a global audience. Great feat for us as being a second-year company now with a very large global footprint. Extremely bullish on next year and to continue those and explore new products and partnerships globally, heavily focused on APAC.
So now we'll transition to the Q&A section. Again, just a note, you can use the Q&A feature on Zoom to submit your questions. As you said, Rob, we'll start with that Amazon question. So can you explain more about today's deal with Amazon and what it means for the company?
Yeah, this is a very important one for us. And as I said here, I'm building a business on fundamentals and execution on global strategy. Starts with inventory, which we secured. Next step is now the supply chain challenge that we're all seeing as a result of various disruption in logistics through weather here in Western Canada, of course, in BC. But as a result of COVID, of course, operational challenges. Amazon approached us a few months back as they saw our 3.0 release. They're very interested in, of course, we've worked very closely with them over the last few years. So they have obviously understanding of our curve and our expectation growth for next year. And the ability now to sign a deal, fulfillment and distribution deal, now enables us to ship our product direct from factory right to the various regional Amazon distribution centers and to be able to be serviced by Amazon Prime. So it's a very key component for us. As part of this, the business seller aspect now gives us access to the 5 million accounts that are connected as part of the business, the Amazon business element. Obviously, the channel reseller has been a key focus of the company, growing distribution, growing eyeballs, always the goal for us, and now being endorsed, if you will, I guess, and put on, the same playing field as some of the largest tech companies today. And having the Amazon name, of course, is always a positive.
The next question is around burn rate. How can the company sustain the current burn rate of 1.5 million per month?
Yeah, this is the one that we got a lot. And as Mark alluded to there, the share-based compensation plays a big part of that. Obviously, we've seen over the quarter, we saw a big spike in share price. Those numbers go up and count against those rates. For us, our actual burn rate is a fraction of that, of course. And for us, we're well positioned now with 14 months of current burn rate as cash on hand, as Mark alluded to. When we look at hiring some of these key talents, of course, the idea of startup, leaving an enterprise company in security, the allurement is share-based compensation. Everyone wants to be in at ground floor, much like our investors do, of course, and plays a big part of it. And for us, we wouldn't be able to have grown our team the way we have without the share-based compensation. Everyone in our company has skin in the game. I'm a firm believer in everyone needs to be on the same page, pulling in the same direction. And that's why our team has been very successful in implementing in time and to speed to market is everyone's passion and belief, and not just the product, but the vision and execution of the company. The employees are the company. And for us, that's my biggest thing is the minute people need a goal to work towards. And of course, we see ups and downs and swings in share prices over the last year. And it's all part of small cap and publicly traded company. But it's a big incentive for us, for our employees, to work and dedicate long hours towards an end result, which benefits shareholders.
The next question is about AllNet. Has the AllNet project begun, and what role will Fobi play?
Yeah, the AllNet project now is breaking ground. The pre-con meetings have been put in place, and a very interesting role for us. It's much bigger than I originally anticipated. The leveraging of the wallet pass is a big part of it. The element now around tokenization, and we've seen the exponential growth and interest and utilization of cryptocurrencies. So without saying too much about what it is they have planned, the use of the wallet will be the hub of their entertainment ecosystem, with the arena, the hotel, the restaurants, the food and beverage. Our data utilization engine will play a huge part in this project as well. Managing all of the social and marketing messaging, building a CRM integrations. We're very entrenched here, and it's quite something to see that a project that 2.5 years seems like a very long point in time is not very far off.
The next question is about Big White. Is the Fobi technology being deployed at Big White currently?
Yeah, there's a shift, of course. When we announced our agreement, it was towards the end of the year. The landscape has now changed, as it's not us servicing it directly. I can say that the TELUS team is in conversations now around contract and implementation. I've sat on numerous calls with Big White and TELUS over the last couple months here. And it's funny, this question comes up today because it actually has come up on a couple of our calls. In fact, that, as I speak a lot about the passion of our shareholders, it's kind of bit us in an ass, bit me in the ass here a bit on this aspect because they've, for whatever reason, continuing to hound Big White management over this same question, which is, I guess, curiosity and interest, but also same side, let us do our job and let us grow the business. And thank you for the support and whatnot. But certain elements here that, there needs to be some boundaries as well, for sure.
There's a few questions about share price, so I'm going to combine them into one that hopefully answers them all. Given the excellent progress on developing and announcing recent strategic partners and acquisitions, what do you contribute the negative pressure on the share price? And then additionally, what do you plan to do to correct it?
Well, I would love to think that I control the market. Obviously, I don't. I mean, there's, I could go on for hours about all the reasons as to why the market goes up and down each day and whatnot. For us, look, we've had a lot of visibility here in the last few months. We've aligned with some of the largest tech giants there are, and as I've previously mentioned here, we've seen now the realization of revenue going back a few quarters and continued growth over the last 3 here. The company, as I said, we've never been in a stronger position. Never had a balance sheet like this. I mean, it's, everything I've done has been on nickels and dimes and trying to figure out how to get to next quarter, let alone now having actual run rate to strategize and execute on that strategy. I wish I did, Devin, control the share price, but I mean, it's just like last year, I feel way over bought, and we had a big consolidation. We were way oversold, and then look what happened again, another big run, and same thing here. We're grossly oversold, and I can't control what certain people position and side of the fence they sit on as to either you're buying a stock for belief or growth, or you're shorting a stock. Those are all parts of the game that unfortunately I don't control. I'm focused on growing the business and executing the business and the strategy and plan. I look to get better every day. For me, I can't live on satisfaction or displeasure of share price on a given day. That's not how we measure the success. If you look at companies like an Amazon early stages went from $106 to $6. You can't measure the success of an organization on a daily closing, quarterly, or whatever, however term you are as a long-term shareholder. All I can do is make the best decisions each day to strengthen the company. We have people that either have invested long-term that are very happy. We've got people that bought in a short term at the high, and of course they're upset they've lost a good portion of their money here. The overall markets, it's that time of year. It's Christmas, it's tax loss. There's a lot of variables here, and like I said, I don't get caught up in it because ultimately I can't control it. I mean, it drives me nuts. I mean, I'll have less gray hair than I do even today. So for me, it's just always about focus on business, and I try to convey that to our team because there's a lot of distractions from shareholders that reach out all the time, of course, that are curious. But we all do our goal, do our job, and at the end of the year, much like going back to last year, we're in an extremely strong position going into 2022.
Next, we have 2 questions about hiring. Why is the company always posting available positions online? And is it hard to find people, or is there a high turnover rate currently within the market?
Yeah, I think I said this on our last call. There's actually a great question from someone that was, what is the risk for next year? And human resources is a risk for a lot of companies. When you start to look at all the various recruiters that have come out of the woodwork over the last 2 years here, you've got remote working, that you've got, especially here in Vancouver, Amazon walks in, and as much as they are as a great partner, it makes it very challenging when they've got the huge resources to throw at people. Same side with Google and whatnot. So for us, we made a concerted effort to ramp up our team for 2 reasons. One, because of necessity of project base and of course positioning for next year. But 2, to that point, our goal is to make this as easy as possible for people to say yes. You're talking about new technology that for most of these organizations, they're not set up from an infrastructure standpoint to do this. So our ability now to offer full end-to-end managed service solution, this is where we're gaining a lot of traction. Now being able to monetize the investment we made into our staff obviously leads to greater revenue and greater profitability. Our team, we've gone from, I think we're 16 at this point last year, now we're upwards of 70. We have 50% of that, of course, in the development engineering. And we've now built out a complete marketing services team to be able to manage all these projects and being able to now offer fully managed professional services, which for us is a very key element to our revenue growth, of course, for next year. And the last question, or part 2, I believe, was around
high turnover.
Yeah, turnover. No, for us, we don't have a high turnover. For us, we're always looking to hire talent, not necessarily just simply on position. That being said, when we look at some of the key roles that we have been hiring for, it's more about the right person and not necessarily filling the seat. It's not 100% necessity to have that seat filled, so we don't have to settle for someone that's not quite the right fit or experience or, economics as well. As I said, you're seeing absolute crazy numbers in today's job postings, and we have a budget, and I need to operate under the budget, and unfortunately that means there's some great people that come along that it doesn't fit just simply because of economics. Love to have them, great experience, but at the end of the day, we're running a business on fundamentals. And for us, the goal for next year is profitability.
Let's just get into the next one about revenue. The company has posted a nice bump in each of the last 3 reporting periods. Does the company expect to continue this growth in 2022?
Yeah, it's one, of course, I get asked a lot. And for us, 2021 was about setting the table. We moved a lot of chips in place. We've made a lot of key hires. We've signed some great partnerships and some reseller agreements. And for us, like we said, it was always about third-party validation and scale. And now we're starting to reap the rewards of some of those relationships. Understanding a lot of what we do too is trophy hunting. We're now starting to find a balance because obviously there's long sell cycles, as we see in a lot of these bigger trophy opportunities, which are great, of course. But for me, it was about finding balance. And now that we have that balance, now that we have the integrations of the acquisitions, we're starting to see the benefit of that. I have always said from day one here, this is not a trade. We're not going to come out from, 600,000 revenue and report 60 million next quarter. This is gradual growth. The momentum is now starting to move down the hill, as they say. And no, we fully expect to see multiples in each quarter for 2022.
There's a few questions about the pandemic, supply chain, and the new variants. So I'll combine them. How has the impact of the new variant Omicron affected Fobi, and does this affect any supply chain, or do you foresee in the future?
Well, it's relatively new. Is it for us, like we said, I mean, we're all about digital transformation, right? This is, I recently was on a very short trip down in the US, and, the travel, the fear again is back, right? So the need for contactless, the need for digital first strategies. I never want to say that that's great news. There's another variant, because it's not, but what it is doing, and we're seeing this over the last few days already, is just that, we're anticipating supply chain disruption. We're anticipating a shift in our business model and approach to becoming more mobile and e-commerce, as we're anticipating closures again in Europe and whatnot. No, for us, I mean, like I said, we're built on contactless and digital, and this just continues to throw more gas on the fire for business operators, for general public to embrace and leverage technology. That's what we are, right? So unfortunately, I have no idea what the crystal ball brings as far as COVID and variants and whatnot. All I do know is that we have the technology that's relevant to help business operators, overcome the storm, as I say. And what was the other component? Sorry.
Just about the variant, will it affect Fobi's business moving forward? There's some questions about how will that affect checkbacks and other Fobi products.
So yeah, it has no impact on us as far as supply chain goes. That's why, I mean, today was another key announcement for us, taking the distribution off of our plate and logistics, putting that in the hands of Amazon Prime is great for us, of course. Checkbacks, we've seen incredible interest in checkbacks over the last couple months here. We've had some very successful implementations. I don't know if you've seen today, but there's also now talk of the US implementing not a 72-hour need for testing, but 24-hour. So our ability here with the integrated, lab testing and notification and identity with the wallet pass is all about real time. I mean, I've talked about real time applications for 2 years now. We are about to head into a scenario next year where it's all going to be digital identity and verification of credentials, whether it's testing, whether it's vaccination, as we see. Now you have to have a federal QR code to get on a train or a plane. So it's not going away. And our ability to provide the real time is going to be absolutely critical for the travel and hospitality industry in 2022. And we couldn't be positioned any stronger.
We have a follow-up on the burn rate question from previous. What was the reason for growing and expanding the Fobi team so quickly this year? I think you did touch on it a little bit.
Well, I think I've answered this one. For us, I hear this through all of my circles, early back in the year, back in January and February, around the challenge of hiring people. Obviously, project reasons was a big part of ramping up. But more importantly for us, it's now a means for us to monetize further through professional services, which, as I said earlier, that majority of these organizations aren't set up to, with infrastructure to manage all of this platforms that we have. They're far happier to pass it over to us, and our marketing services team is put to work, and it's just another line revenue item for us.
One of our last questions here is on progress. So looking at the past progress of this year and projections for this year, are you happy with the company's progress this year?
Yeah, I mean, I don't know if I'm ever happy, but when we set our goal at the beginning of the year, we had key strategic initiatives around M&A, around growth of our team and operation. I'm 100% happy with our team and the operation for sure. We have some incredible, passionate people on board our team. And like I said earlier, having everyone have skin in the game. Of course, there's the highs and the lows throughout the year that you see, but we do have a tremendous team, and team is everything at Fobi. Without the team, I wouldn't have the ability to sit back and move the chips around and strategize and execute, which is obviously the challenge as a startup, wearing many, many hats, as they say. But no, I'm very, very proud of our team, first and foremost. From our growth, we're now, with Pass Creator and Pass Wallet and Cupils and others that are in the pipeline here, we're extremely well positioned for 2022 on many, many, many fronts of the business. I think the relevancy of real time, digital first, and personalized marketing will be a big story that you'll see from the CPG side, where we couldn't be in a better position. I mean, I've got now, as I said, a balance sheet, which is very nice. Our stock is a currency. A lot of these companies, as a result of COVID, it's been extremely challenging to raise capital. So there's a lot of opportunity out there for sure. And I believe it's only going to get more difficult in 2022 for most definitely these private companies. We're seeing some amazing talent. We're seeing some amazing product innovation. And, the year's not over yet.
Well, thank you, Rob. To our listeners, thank you for joining us today for Fobi's financial highlight and webinar. That brings close to our Q&A and to our webinar today. Again, this webinar will be recorded and posted on Fobi's website. Before we sign off, is there any last words you'd like to say, Rob, to the listeners?
Yeah, just thanks for the continued support. I've mentioned before, we've got a lot of great, passionate shareholders, of course. As we said, this is a long game, and we're checking the boxes each quarter now is to progress and growth. And as I said, each day we get stronger. And for us, I mentioned that the year isn't over yet. There's many other initiatives that we're working on releasing and finalizing, and which will continue to put us even in a bigger position for 2022.
Thank you. We wish you all happy holidays and a great rest of your day.